The cryptocurrency market has seen a surge in volatility over the past 24 hours as a consequence of recent economic news. With Bitcoin still pushing sideways for coming up on 3 months and altcoins continuing downwards, a lot of people are feeling uncertain. In today's video, we are going over the macro charts, the short-term charts, and discussing exactly what you should be paying attention to hopefully break some of those walls down of uncertainty. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Bitcoin has seen a large amount of volatility following the CPI and interest rate data releases. In today's video, we're going to be discussing what has happened on the price charts, where Bitcoin is likely to go next, the key levels you should be paying attention to, Bitcoin dominance, the altcoin season, and the macro charts. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure raw TA. If that is the kind of content you were interested in, join us on Telegram, the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, trading chart and education chat, news, help, trade setup, and daily video chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel by clicking my name or these links for more info. Let's go ahead, guys, and dive on in. So taking a very brief look at the price action over the last 24 hours, we saw a pretty big correction for Bitcoin to retest the major $66,000 to $67,000 area of support. Since then, we saw a gradual climb up in price action, moving into the widely anticipated CPI event, where we saw a fantastically bullish result. CPI data came in at a very positive 0.2, which is 0.1 under the prior month-on-month core inflation reading. And our month-on-month inflation rate actually came in at 0%. So with that incredibly bullish news, we saw a very rapid and very strong movement upwards for Bitcoin, moving into the $70,000 region. But since following, we saw a pretty bearish announcement from the Federal Reserve discussing how they are likely to only see one interest rate cut in the remainder of 2024, and that even though we saw a positive result in inflation, they are still skeptical moving forward. And I believe the market corrected as a consequence of the market, or that investors, not really hearing the bullish tone they were expecting as a consequence of the positive interest rate data and the fact that multiple countries are moving towards interest rates cuts. So it's not that the announcement was bearish, they are still moving towards interest rate cuts, which is of course bullish, but the tone of which the meeting was set in was a little bit more bearish than anticipated considering the recent events. So with that, we saw a correction in Bitcoin, taking us back down to the lows prior to the inflation data rally at around 67,300. We'll be discussing in more detail in just a moment what is happening on the short term. That is a brief overview of the 24 hours. Moving into the market data, 24-hour volume is up 2.48%, sitting at 166 billion. 24-hour liquidations, 197 million, down 23%. Of the nearly 200 million in liquidations, 109 million have come from long positions, of course, with that large volatility toward the downside, liquidating a lot of late entrants in those long positions, and 87 million in short positions. The DXY did take a nasty correction on the downside. Of course, rising inflation is an indication that they are going to be moving to an interest rate cut, which of course is perceived to be bearish. The dollar does generally take a bit of a hit. So we have seen a decrease here on the DXY, retesting that now yearly uptrend yet again. S&P 500 absolutely powering ahead over here. Like we said, guys, we told you for many weeks, a weekly candle close above that prior high will trigger the next directional continuation upwards we are still looking for 6,000. We are moving for a high time frame target at 6,000, currently 5,500, looking very strong, likely going to continue this strength moving forward. The Dow Jones slowly starting to pick up a little bit of strength. Again, we are still creating on the shorter time frame these lower highs, or should I say, guys, not lower highs, higher lows. And of course, this is nice, a very nice bullish indication over here that we are going to be moving to our prior high. Just like the S&P 500, for us, it's that directional continuation. We do need to break above that prior high. Again, only when we break below these lows will the bears really step in control. The stock market as a whole over here really overshadowing Bitcoin's performance. We're discussing that in today's video. So before we get into Bitcoin and the rest of our analysis, a quick word from today's video sponsor, and we'll jump on in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump into Bitcoin, starting on our current range. So as we can see, this range has been going on for quite some time now. What we can see with the high time frame range, we have got a very, very key point, which is going to be that $67,000 to $66,000 region. This is acting as the midline between our range high and our range low. And again, this is going to be the bullish territory and bearish territory. What that means yet again is while we are above the bullish territory, above the midline, the probability of retest of the range high is greater than the probability of retest of the range low. It doesn't necessarily mean we are permanently going up. It means the probability of range high retests are greater than low, and therefore, while we remain above the midline, we should not be expecting a correction underneath the midline. The midline is a bearish trigger point, which if were lost, would signify a dramatic shift in the trend over a perceived period of time, as we would have been breaking down from a near 30-day horizontal support level. So that is going to be the most important level. When we're zooming out, we have two more very important levels. We have got our range high, and we have got our range low. Our range high is going to be the price point between 71,600 to 72,500. This range high is represented by this blue square area or rectangle, which represents again a bullish trigger point. A break above the range high will facilitate a directional continuation upwards. Just like we saw in the S&P 500, that was our range high. For Bitcoin respectively, this is going to be our range high trigger. So if we are able to sustain a break above this range high, we should see that directional continuation upwards. Whereas, again, if we see a breakdown of the range low, we will see a equal and opposite directional move toward that downside. So if we take a look at this high time frame range and focus on the measured move, so the depth of this range, we can apply that depth of the range to the perceived breakout point. That will give us an overall measured move or price expectation upon the breakout of that range. That takes us into the $85,000 region. So we can say a breakout of this 3-month consolidation has the possibility to facilitate a move as high as 85,000. If we're taking a look at the shorter time frame price action, what we can see is we are developing another horizontal range in the upper half between the midline at 67 and of course that $72,000 resistance. And what we can see, it is very similar to the high time frame range we have been in. We have got our entrance into our range, our deviation high, our retest low, our retest high, our deviation low, and then a swing to our high. If we look at the current price action, we have the entrance into the range, a retest toward the low side, retest towards that deviation high, swing and deviation below the range low, and then continuation upwards. What are we seeing here? We are seeing a similar fractal of what we have been seeing over the course of the last 3 months occur now in a tighter range, and of course above the midline of our horizontal support. Again, further stating the fact that while we remain above this horizontal support at 67 to 66,000, we should be assuming directional continuations through the range high rather than directional continuations below. But let's go ahead and talk about what those probabilities are and the bearish and bullish case scenarios and what you should be paying attention to. So let's go jump down to a smaller time frame. On the short-term charts, guys, we can see right over here, okay, the short-term charts, let's go to a 2-hour chart. This is going to be our trigger points. If we look at the range we are in, this is going to be that shorter time frame range we were discussing. We can see we have got our sell side liquidity at a wick at around 65.8k. We're going to draw a black line over here. This black line represents our bearish trigger point. So that means if we fail to sustain above that region, above that exact price point, we will be looking for directional continuations down. This line is going to be the indicator, the trigger point to confirm the fact that we have broken below this 30-day horizontal consolidation. So we've sustained below this 65,800 region. We would be expecting directional continuations downwards into our lower areas of support. Where would we primarily be looking at? We would be looking at a potential support region between around 63,000 or even an upper region around 64.5k, which is going to be this local low over here. So again, if we want to see that bearish move, we need to see directional breakdowns. We would need to see a directional breakdown below 65.8. That would trigger a continuation to 64.5 and finally a continuation to 63.6. Now again, while we are underneath that midline level, the probabilities of directional continuations to 60,000 becomes a possibility again. And as we know, guys, 60,000 is going to be that high time frame area of support where, if lost, would indicate the first point of macro weakness from a structural perspective we have had on the price charts ever since we entered the bull run. If we look at the bull run started right over here, 23rd of October. We had our lows entering the bull market. We had our higher lows. We have got our higher lows again. So a breakdown of 60,000 would be the first higher low that we would be breaking below on the macro charts, which would signify a shift into a high time frame downtrend and would be very, very bearish. So those are the bearish scenarios over here. I don't think it's likely, but again, we have to be aware of the possibility for those moves. Once more, we could see corrections back into this liquidity wick and continuation upward. It is only if we see price sustain below 65.8 are we at a risk for directional continuations lower. Let's talk about the shorter time frame and the possibility for that to even occur. If we look at the shorter time frame price action, we had a nice downtrend over here which we broke above. Again, we failed to sustain. This was again the FOMC meeting. We had CPI pushes up. We failed to sustain as we had the FOMC meeting push us back down. Nevertheless, we have established a short-term uptrend represented by this diagonal trend line. So while we remain above this diagonal trend line, we could see the price tick on back up toward that range high. However, if we drop below this diagonal support level, we would be assuming a directional move back into the $67,000 to $66,000 region, this red territory, to potentially double bottom or again see a deviation below that prior low to continue back upwards, or again, like we said, price sustain below the low. So as of right now, guys, we are in a uptrend. It is very choppy. We are in an uptrend. The price is horrendous right now. Again, a lot of emotions, a lot of fear, a lot of uncertainty, a lot of doubt, a lot of euphoria, a whole bunch of emotions right now, making the price action incredibly difficult to maneuver. But right now we are looking at our key trend levels, and our key trend levels is diagonal level. Our horizontal levels suggest support as of right now. So pay attention to that. The bullish case scenario on the short term is going to be a fast stretch as of right now, because we need to break back above that buy side liquidity. Now, if we drag that horizontal trend line across over here and we go ahead and drag it to our left, we can see that buy side liquidity was going to be our area of support prior to the correction we had about 5 days ago. So this buy side liquidity is going to be the trigger for the directional continuation into the range high. So to say it again, while we remain above our horizontal support, which is the 67 to 66,000 region, the probability of a retest of the range high is greater than the probability of a retest of 60,000. While we remain above our diagonal trend line, we are assuming a directional continuation towards a bullish trigger over a directional continuation into 66 to 67,000. If we break over our directional trigger, that is going to be the indication that we are going to see a continuation into our range high. And again, like we have seen prior, if we retest, okay, if we retest the range high, we have seen deviation to the bottom side, it is likely we see a break above that range high. So keep your eyes on the short-term charts. So let's move over, guys, to Bitcoin dominance. Bitcoin dominance is still moving upwards over here. Again, terrible for altcoins. A little bit of a short-term pullback on the last 24 hours. Nothing too substantial. Only concern here is if Bitcoin dominance breaks over our 56 to 57 resistance. If we break over to 56 to 57% resistance, that is when we expect Bitcoin to really overpower altcoins and really show altcoins a whole world of pain again. And we could potentially see new lows for a lot of altcoins if that does occur. Again, while we remain under this resistance, the altcoin season, guys, is on the cards. It is on the table. It is still coming. It is still possible. But if we break above here, the possibility for altcoin season diminishes considerably. So right now, all is well. Total cryptocurrency market cap, total 3 market cap, altcoins. Let's take a look, guys. We saw a very horrendous indicator pop up actually over the last weekly candle. We saw a weekly close below the high short EMA, which is the yellow line. And again, we had not seen that occur in the prior cycle ever since we entered phase number 3 onwards to the all-time high, which was a pi cycle high, mind you, okay? We did not see a weekly candle close underneath the high short EMA. In this instance, we saw that weekly candle close, but all hope is not lost because we need to break down from the low short EMA, which is the green line, to invalidate or to signify a potential reversal on the macro. Again, in the prior cycle, we only broke below the low short EMA after the pi cycle high. In this instance, if we look at the price action, we are actually retesting. We retested that point on the daily and weekly chart already. So it tells us that altcoins really don't have that much more movement room toward the downside. If we look at this horizontal support spanning from the start of February, this is a massive support, a 5-month-long support here for altcoins. If we fail to sustain above this level, altcoins are in for a massive correction, guys. I'm not even kidding. We're going to see a bit of pain for altcoins if we do not sustain above this level. But again, support is support until it is not. And while we sustain above this level, all of the historical data is telling us we could expect directional continuations. Once more, altcoins will only enter the parabolic phase when we break above 88 billion. Let's move over to the total. The total is looking very similar over here to as it has in the past. Again, provided this area of support sustains, the cryptocurrency market is bullish. If you need to understand whether things are bullish or bearish, look at this chart. This is a representation of crypto as a whole. This is our yearly level of resistance. We have retested it as support. Provided we remain above this level, we are bullish. If we drop below it, we are in a downtrend. We are bearish yet again. Keep that in mind. It is literally that simple. Same goes to the Bitcoin weekly chart over here, but there is one more level I do want to show you. The weekly chart, we are looking at 2 uptrends. Firstly, we are looking at the bull market uptrend, which is going to be this diagonal trend line. This is a trend line that has originated from the initiation of the bull market and our first low. A breakdown of this trend line, which is going to be a loss of 56,000, would trigger a high time frame downtrend or represent the end of the bull market. And then we have got our current uptrend, which is represented by our first low after the initiation of the bull market, our second low, these are all sell side liquidity levels, okay, which is a representation of the current uptrend. Again, a loss of this diagonal trend line could suggest we are seeing a retest of 60,000. Again, if you look at where this diagonal trend line lines up, it lines up with, Okay, let's go take a look at it. It lines up with that wick we talked about, which is around 64,500 right over here. So we drop below that level, we could be seeing a further correction for Bitcoin. That is it for today, guys. We didn't have enough time to go over the macro charts, but we'll jump into that tomorrow. I hope you have a fantastic day. Remain calm, remain vigilant, stick to your plan. Review your invalidations and adapt to what is happening, guys. This is not the time to be predictive. Remember, when you're looking at a market, you should be predictive when we are approaching absolute tops and bottoms. We do not have the top signals valid at the moment to suggest this is a top. All we are seeing right now is a high time frame consolidation. Could that high time frame consolidation develop into a macro reversal? Absolutely. But until that happens, the probabilities of it not happening is greater than it is. Thanks for watching. See you guys tomorrow. Bye.